Williams here with Elliott Wave Source, #1 source for Elliott Wave technical analysis. Today is Friday, July 26, 2013, and today I will be just doing a recap on the pairs that we touched upon during the week, covered in videos and on the technical analysis by the charts. So let's just start out with the Euro Pound. And with this pair, we have been looking to enter it on the short side. We were looking at it at this current low of 0.8578 as our wave 1 down, and we're just waiting on that wave 2 up to be completed so we can enter and look to go short. I have said we should look to load up into this pair, as we might not see it go all the way up to 87, which would be the top of that descending channel. So we can look to load up in this pair, so maybe a quarter position at 0.864, and then we'll do another at 0.866, and then 0.869. So look to, or 868 rather, look to load up in this pair short, and then look for it to push lower. Should be hitting the lower bounds of that channel, which would be about 83.5. Lower bounds of the channel. So look for this pair to push lower, but we'll just look to load up on it as well as it pushes higher. Another pair I wanted to touch on was the pound dollar, and with the pound we have been following this for quite some time. So I did state that you should look to get short on the retest in the video. So as we saw, break and a retest, and then it dropped to 100 pips and then shot back up in the air. So for you guys that entered that pair, hopefully you guys had a trailing stop of at least 60 pips. Something, a rule of thumb, you should always have a trailing stop on all your pairs, at least 60 pips, just for moments like this, because it dropped down within the hour and then shot back up. But it shot back up, retested, so that would be a good area to get short again at 54. But prices are currently at a good area to get short right now. So you can look to get short at 154 and look for it to push lower with a stop above that recent high of 1.543, So stop at least 1.545. So look to enter at 1.54, maybe 1.541 if markets permit. Look to enter short and look for it to drop, stated before, over 300-400 pips. Other dollar cross we looked at this week was the Aussie dollar, and with the Aussie dollar, saw that we had the impulses going up. Wave 1 was completed, then A, B, and we were looking to take advantage of that C wave. So initially we expected the C wave to terminate at the 50% fib, so at 91.6 were the levels told you guys to look to exit at, as the entry point was somewhere around 92.6, so about 100 pip drop, but it actually pushed further down to 94.2, so it hit the 38.2 fib, so it made a 61.8% retracement and hit that to round out wave 2, and then we look to enter it long on that wave 2 bounce. So for those that look to enter that pair at 91.6, stop loss would have been below that, so you guys benefited as it jumped over 150 pips from that point. So currently it looks as if we had that within the larger wave 3. We had wave 1 completed, and now we're just looking for wave 2 to finish falling down, and then you can look to enter long again. So a good area to get long would be at 91.9, and that would be a 61.8% retracement of that wave A, or you can look for a bounce off that ascending trend line, which would coincide with this 76.4% retracement. So anywhere between those two, good areas to look to get long with a stop loss of, if you can, below the recent low, but if not, then at 91.5. good area to put a stop loss, and this pair should be pushing up, but we should see that correction continue downwards. So next week, that should dominate next week. Okay, let's jump over to the yen crosses now. So with the Aussie yen, we had that wave 1 and that A completed, and we were looking at wave B to try to take advantage of that. In the beginning of the week, prices were trading within this channel, so I told you guys to look for a bounce off the upper bounds of the channel, look to get short at 92.5, and look for it to drop to the 50% retracement level. So that would have been about 100, 140, 150 pip gain. I think I told you guys to come out at 91.1, so that'll be 140 pip gain. Well, prices actually pushed down to push slightly beyond the 61.8% retracement level, and as we take the distance of wave A, we see that this pair actually moved. When we apply to the end of B, we see this pair actually move 261.8% of wave A, so it extended by 261%. So it did that, and it kind of coincided with that 61.8. It just shot slightly through, so we should start seeing a correction in this pair, but I would not rule out if it actually pushes down a bit lower and hit this ascending trend line right here, which would then coincide with that 76.8% fib line, or slightly beyond that. So would not rule that out, but for you guys that did get a chance to take advantage of that pair, congrats on that. Okay, let's jump over to the euro yen. In the euro yen, we were looking for this pair to push lower from this point. This is what I had pegged as the B earlier in the week. So we had this pegged as the B wave, and we were looking at this downswing, and we looked to take advantage of that. At the moment, it had broken this ascending trend line. Broken the ascending trend line, and it retested, so it looked pretty attractive to trade to the downside, but prices actually then shot a lot higher and retested the trend line once more. But now it appears as if we have rounded out that B wave. So for those look to enter on this analysis, and you guys would have lost a bit on this one, as we were looking at that. We were looking at this level to get short. So we're looking at 131.7, that region, with a stop loss above 132. So for you guys that entered, you guys would have lost on that pair, about 50 pips on that, as it did push higher. But as stated, it appears as if price action has started to correct now. So it appears we had wave 1, which was anticipated that it would bounce off this ascending trend line. So we should get wave 2. And once wave 2 rounds out, then we should look to enter the pair short. So no target except for wave 2 at this time. So we will monitor this pair, and sometime mid next week, towards the end of next week, we should have some targets for wave 2. And then we can look to get short and take advantage of that down move. Jumping over to the CAD yen. Another pair that looked very attractive to trade at the end of the week. At the beginning of the week, rather. On Monday it was a 333, so we had the W, the X, Y, the X, and then this is what we had as the Z before. So we had this at the Z, and then we said look for a retest to get short. So we had this at the Z, we got the retest on the open. And prices were down here, we said look for another retest. Well, it retested here again, 96.9. And then it dropped about 50 pips and then shot back up and through. So also another pair that we got burned on. Analysis was just slightly off. So for those that entered a 92.9, you probably would have got stopped out, as it jumped over 60. It jumped over 75 pips beyond what we were looking at to get short. And we usually have stops lower than about 50 pips or lower than 60, right below 60. So for that pair, you would have got stopped out on, but it did bounce off that 78% fib. Well, the 61.8% fib, I believe. Yeah, it bounced right off the 61.8% fib, and it has started to push down lower. It also broke that descending trend line, so we can look for a retest on this and then look to catch a short at that point. So look to enter this pair short at 96.5. Good area to get short this pair, so it's about 110 pips off right now. We should see somewhat of a correction as prices just push down one direction for the past 2 days. So we should see a correction sometime next week, and then we would look to enter short and take advantage of that. The other pair, two more yen pairs, a Swiss yen. It's another one we were looking at. This is one also we said to look to get short on the break, but I did state that this one could push higher, as the targets for this pair was set at 107.5, the targets upwards. So I did think this one could have went a bit higher, and it did. So for those that entered short of this pair, that's when you got stopped out on for about 40. As I said, put the stops at 106.7, put a tight stop, and then look to get short rather at that 107.4, 107.5 area. And for those that built into the position, that was probably the better option to go, as even though the whole position is not filled in, but you're probably in about 50% of the position, and you could just hold on and look for this pair just push lower. So the pairs we got, wave 1, 2, and then now working on 3 in that lower cycle. So it appears as if we have 1, 2, 3. So look for this pair to push lower. We will develop targets on this pair, and we will look for areas where we can enter it short. But you can see a trend line right here. So about 106.5 is probably a good area to get short this pair off the bounce off that descending trend line, 106.5. And last but not least, the dollar yen. So the dollar yen we were looking at, and we were looking to get short at that 100.4 level, which prices did hit. So we did get that correction up towards that 104 level. And then, so for those that did enter that pair short, congrats on that, as you caught this entire move downwards. So prices moved about 240 pips, just about 240 pips. We could see somewhat of a correction, so you could exit 50%, even though our initial target for it is 97.5. So you can look for 97.5 to exit some of the pair. We do have 3 targets on this pair, so 97.5 is the first. So you can look to exit 50%, and then on the pullback we can look to buy in some more. So as of this time, we do not have any set targets, even though we see that the wave 1, 2, so the initial target for wave 3 is set at 95.4, 95.3, which coincides with the 38.2% retracement of that entire move, or a 61.8%, a 61% retracement of the entire move of wave A. So we could see prices push to that level. We should see prices push to that level. But if we take a look at the subwave right here, the one labeled in gray, so see we got wave 1 followed by a 76.4% retracement for wave 2, and then wave 3 is just shy of 161.8%, 161.8. So we could see prices push down to that, which would be 97.7, 97.8. Could see prices push there and then correct. It should correct 26.4%, as it would alternate with the wave 2 correction. So we could see somewhat of a flat correction or just a quick zigzag, maybe a little triangle. Could see something for wave 4. So 98.4 is that target. So you could just leave the entire position in and just look for it to push lower towards our initial targets. So if 97.5 is the initial targets, or if you want to, you can just hold on for that 96 region. Stand to make 400 or 500 pips on that pair. And then finally, we just look at gold and the dollar index. So start out with the dollar index, and with that, we initially had it as 1, 2, 3, and then this down move would have been 4, and it would have ended right here. I was expecting a double bottom, but prices pushed beyond that 82.5 area, and I did state if prices violate 82.3, then we would look for a bounce off this ascending trend line, which is what we're seeing taking place right now. So we're seeing a bounce off this ascending trend line. So going into next week, we could see a lot of dollar strength, and that would validate our move in the pound yen and that move in the Aussie yen. Well, the corrective move in the Aussie yen. It would validate both those moves. And finally, with gold, we were expecting gold to push towards 1380. I was expecting a break of 1380 as we saw waves 1, 2, 3, and then the 4, a minor flat correction, and then this is our 5th wave. So we were expecting that initially, and we're still expecting that, but now we can just be wary that with this initial wave 1, we could also see that this pair does not provide a extended wave. So it could just be 3 waves with similar length. So this could be our 5th wave, and then we could be in that wave 2 correction. So what would validate that would be a break below 1270. So if we see prices push below 1270, then we would know that we are in the wave 2 correction, and we will then look to get long this pair again. But for those, well, this commodity, but for those, we're still looking for it to push towards that 1380 level. So thanks for watching today's recap video. Any questions or comments, definitely jump in the chat room, shoot us an email, or direct message us on Twitter. Whatever method you guys want to use to contact us, and we will gladly assist you with any questions or comments that you guys may have going into the weekend. Once again, thanks for watching the video, and enjoy your weekend.